Welcome back. Mortgage rates have been decreasing, but so has home sales. In other words, housing affordability has been improving, but we're not seeing an increase in home sales on a national level. In today's video, I'm going to talk about the latest housing market news from Redfin, just posted last week regarding housing inventory, home prices, home sales, the share of price reductions, and much, much more. This was just posted on September 19th. So if you guys are new here, please subscribe if you haven't done so already. I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house right now. With that said, I appreciate you guys so much. Let's begin. Again, just posted on September 19th. This is kind of funny. It says housing payments have decreased nearly $300 per month from April's all-time record high. Improving affordability has yet to push up pending home sales. So because rates have been decreasing, it's basically about $300 less per month to buy a house right now, looking at asking prices on a national level, and of course, looking at weekly rates according to Freddie Mac. So housing affordability has been improving, but a measure of contracts being signed between buyers and sellers or pending home sales is actually still down. Now, here's the funny part. It says, but that could change after the Fed cut interest rates for the first time since 2020 this week. So you guys all know the Fed cut rates, the federal funds rate, by 50 basis points or 0.5 percentage points on Wednesday. But yeah, the Fed does not control mortgage rates. They control the federal funds rate, which is the short-term rate that banks charge each other to lend each other money. It's basically an overnight rate. That cut by the Fed controls really short-term rates. So if you have a balance on your HELOC or your home equity line of credit, you have a balance on a credit card, or you want to buy a new car, I don't advise you doing that right now, but if you want to buy a new car, also your interest rate would be lower today as well. But the Fed cut rates on Wednesday. And the funny thing is that ever since Wednesday, rates have been increasing very slightly because everyone thought the Fed was going to start cutting rates on Wednesday. And because of that, weeks, maybe even months before that, the mortgage rates we saw then had already taken consideration that the Fed was going to cut rates on Wednesday last week. Anyways, I think it's just kind of laughable here saying that after the Fed cuts interest rates, that could improve pending home sales. It's just kind of ridiculous. Anyways, it says the median U.S. housing payment, this is average monthly housing payments, at $2,534 per month for the 4 weeks ended September 15th was down by 2.7% from 1 year ago, the biggest year-over-year decrease since May of 2020. Therefore, monthly housing payments are falling because of decreasing mortgage rates, which have dropped to the lowest levels in about 20 months, leading up to the Fed's rate cut decision last Wednesday. I want to share what they have to say regarding some more trends though, but I want to talk about this here. It says demand may improve after yesterday's interest rate cut. This article was posted last Thursday. So demand from home buyers may improve after yesterday's interest rate cut by the Fed, with house hunters who had been waiting for the Fed to lower rates, not mortgage rates, the federal funds rate, waiting for the Fed to lower rates, jumping into the market now that it has actually happened. But again, don't be confused here. The Fed does not decrease mortgage rates. They decrease short-term rates. And of course, the short-term rates that banks charge each other to lend each other money, not mortgage rates. So Redfin economists note that mortgage rates are unlikely to fall much further in the next few weeks because markets have already priced in expectations of an aggressive rate cut that was on Wednesday. And the Fed is projecting only gradual cuts from here on out. But rates may swing up or down before the end of the year, depending on incoming inflation and jobs reports. So there you go. Rates are going to be up or down for the remainder of the year. Right? But it's just kind of funny here saying that at the very beginning of this article, that after the Fed starts cutting interest rates for the first time since 2020, last week, that pending home sales could improve. But when you read on, it talks about how the market had already priced in those expectations of a Fed rate cut. And of course, rates could be moving up or down. Ridiculous. Anyways, Let's talk about application numbers, a leading indication of our housing market here, or home buying demand. So mortgage purchase applications, that's from the MBA, or the Mortgage News Daily, not the Mortgage Bankers Association. That was up by 5% from 1 week ago, with some buyers jumping off the sidelines as mortgage rates fall. But many would-be home buyers are still holding off, with pending home sales down 6.9% year over year, one of the biggest decreases since October of 2023. So therefore, we're seeing more inventory, we're seeing decreasing rates, yet pending home sales are still down by about 7% year over year. They mentioned that right here. New listings are up by 5.1% year over year, and the total number of houses for sale, or housing inventory, is up by 16.1%. Also, according to Redfin, there are several reasons sales have not picked up. Home prices are still rising is the first one. Oh man, right. All right, let me just share a chart looking at prices. So let me know if you guys think that home prices are still rising. Take a look at this graph, which is right here. Let me just exclude prior years, only looking at this year. What do you guys see? Are home prices still increasing or rising? I don't know. You guys let me know. I think that what they mean is that home prices are still up compared to the previous year. And at 3%, this has basically been paid at 3 to about 4% basically all year. So sales are rising compared to last year, but clearly prices are decreasing ever since really June this year, which by the way is normal. It is seasonal to see prices decrease around midsummer and then to kind of gradually decrease for the remainder of the year through the early part of next year. In any case, home prices are still rising, and Redfin agents report that would-be home buyers are waiting for rates to fall more, while other prospective buyers aren't even aware that rates actually have decreased. They actually are not following my channel if they believe that. Aside from rate-related reasons, agents report that many house owners are confused about the new NAR rules, and others are waiting for after the presidential election. By the way, I've made several videos regarding these new NAR rules based on the settlement that was announced several months ago. And if you guys have any questions about that, then please leave me a comment below. I made videos about these, but maybe it's worth helping you guys out in the comment section if I can. And then maybe we'll make some more videos regarding that as well, what we're seeing based on boots on the ground experiences as an agent here in Sacramento, what I'm personally seeing regarding the impact to our housing market and how it is to buy a house right now. So if you guys have any questions about that, or if you want a separate video about that, then please leave me a comment below. All right, moving on. Let's talk about leading indications, and we'll talk about rates. So as of September 18th, last week, the daily rate, according to the Mortgage News Daily, was at 6.15%. Now I'm making today's video on Tuesday, September 24th. Looking at their website, now it's at 6.18%, a decrease of 2 basis points compared to yesterday. Look at these rates though. FHA and VA loans is around 5.75%. So looking at the 30-year fixed rate going back 1 year, 1 year ago at this time, look at that. 1 year ago, we're at 7.39%, a giant decrease down by 121 basis points or 1.21 percentage points compared to 12 months ago. So my big takeaway regarding that is that it's pretty well to see that pending home sales are down by 7% when last year's time we're basically at way over 7%, around 7.4%. So decreasing rates so far really haven't caused home sales to increase this year. In my opinion, this is really due to the fact that housing affordability is still a giant issue right now because of increasing insurance costs in some areas. I personally haven't seen that very much in Sacramento, but increasing insurance costs, especially in Texas, Florida, other states that have big increases in home insurance rates, but of course still elevated home prices as well. Now, speaking of application numbers, that did increase by 5% from 1 week ago. We are down by 0.4% from 12 months ago. Actually did some digging for you guys. I looked at their weekly survey that the MBA actually posts. I actually went back all the way through 2021. I didn't see any week in which application numbers were down by less than 0.4%. So this is actually one of the smallest decreases year over year in quite some time. Let's have a look at that report just posted on September 18th. And this report or survey covers the week ended September 13th. Now this is wild. The refinance index, increased by 24% compared to the previous week and is up by a whopping 127% compared to 1 year ago. So a lot of people, or I should say a big increase of people applying for a loan to refinance their mortgage compared to 1 year ago. Back in, when was it? Late 2022, that number, I believe, was down by about 90% because rates were increasing so much. And right now, a huge increase, up by 127% from 1 year ago. Maybe I should start making some more videos about refis because, of course, we're seeing a big number right here. Also, the seasonally adjusted purchase index, which of course is a measure of people submitting loan applications to buy houses, that increased by 5%. But again, it has only increased by 0.4% from 1 year ago. Also, take a look at this. The refinance share of application numbers was at 51.2%. So basically, of all the applications, whether it's for a refi or for a purchase, half were from a refi and half were for a purchase. That number, by the way, at 51%, that was in the range of 30 to about 35% for much of this year. So a big increase in the share of refis right now. Something that is also worth noting as well, we're not seeing this giant increase of people submitting loan applications using an ARM or an adjustable rate mortgage. And of course, an ARM is a loan product that's more risky, in which the fixed term is for a short period of time. It can be 5, 10, 7 years, etc. It's fixed for a short period of time, and thereafter it becomes a variable rate loan. Therefore, it's much more risky compared to a 30-year fixed rate, for example. So in any case, what I mentioned that is that the share of people who are doing ARMs is still at relatively low levels, only at about 5.9% of all application numbers right now. Going back to Redfin's report, let's talk about Redfin's Home Buyer Demand Index. That's, of course, an index which measures home tours and other home buying services that they are getting from their agents. That is unchanged from 1 month ago and down 7% year over year. Meanwhile, Google searches for homes for sale, not home for sale, is down 8% from a month ago and down a whopping 16% from 12 months ago. All right, let's talk about some other trends we're seeing right now. We'll talk about prices, inventory levels, new listings, and much, much more. And these kind of like area of this report covers 400 plus US metros. Their weekly data goes back to the year of 2015, and it is subject to revision. So in regards to home prices, based on the median sale price, we're at just over $385,000, up by 3.4% year over year. Also, the median monthly mortgage payment, like I mentioned, $2,534 per month. That is a decrease down by 2.7% year over year. The biggest year-over-year decrease since May of 2020. And like I mentioned, it's approximately $300 less to buy a house per month right now compared to the all-time high that was set back in April this year. They also analyzed the 50 most populous metros as well. Now, this is a fairly significant change compared to 1 month ago, because they are now noting for the 4 weeks ended September 15th, because there's now 9 metros that are down compared to the previous year. Looking at the data from last week, there was actually 8 metros that were down. Now there's 9. Also, 1 month ago, there was 5 metros. Now it's basically double that at 9 down year over year. The biggest decreases is, of course, Austin, Texas, down by 4.8%. Then we have Oakland down by 3.1%, San Antonio down by 2.5%, Dallas has decreased by 2.3%, and Tampa has experienced a decline of 1.5%. In contrast, these are big swings here. Look at Newark, New Jersey, up by nearly 12% compared to nearly a 5% decrease in Austin, Texas. Then we have Milwaukee, Providence, Nassau County, New York, and Warren, Michigan, up by 7.9%. In regards to the metros that have experienced the biggest increases of pending home sales and the biggest decreases, these are these metros. Let's start with the biggest gains. That's San Antonio, Texas, up by 7.6. Then we have San Jose, California, Phoenix, San Diego, and Cleveland, Ohio. In contrast, West Palm Beach, Florida experienced the biggest decline, down by a whopping 20%. If you guys know what's going on in that market, leave us a comment below, because a 20% decrease in the measure of contracts being signed is a huge decline. After that, we have Miami, Florida, down by 19.2%. New Brunswick, New Jersey, down by nearly 15%. Fort Lauderdale, Florida, down by 15%. And Atlanta, down by 14%. Therefore, out of the 50 most populous metros, 15 are actually up compared to 1 year ago. This is actually a slight improvement from last week. So the previous week, there was 13 metros that were up. Now there's 15. In regards to new supply in the market or new listings, those decrease in 12 metros. So in contrast, it means that 38 experience increases of the measure of new supply in the market. So an increase of new listings for the most part of the United States. Those biggest increases, Las Vegas, Nevada, up by 18.3. Then we have Phoenix, San Jose, New York, and Anaheim, California, based in Orange County. The biggest declines, in contrast, though, were San Antonio, Texas, down by 21%, Atlanta, Austin, Texas, San Francisco, and Chicago, Illinois, down by 4.7%. For the nation as a whole, let's look at pending home sales. So pending home sales are down by 6.9%, yet new listings rose by 5.1%. So even though we saw an increase of more supply in the market or more houses being listed for sale, up by 5.1%, pending home sales actually decreased by nearly 7%. On top of that, there's approximately 16.1% more homes for sale right now compared to the same time frame 1 year ago. But again, we still saw a lack of home sales last week. Redfin also notes here that the gains of 16.1% of inventory is actually the smallest increase since April this year. Also, the month supply is at 3.9 months, an increase of 0.8 points, or 3.1 months 1 year ago. That is, by the way, at 3.9 months, the highest level since February this year. Let's take a look at Redfin's data center regarding new listings. So again, that did increase by 5.1% year over year. Here's something I found to be interesting. That's actually the biggest year-over-year gain going all the way back until basically June this year. So the measure or the increase of new supply in the market is basically at a 2-month low when looking at year-over-year changes. When we include the past several years, this is something I also noted as well. New listings are basically increasing for the past couple of weeks, whereas in years past, and this is kind of normal, new supply in the market kind of tends to peak around May and June, and then kind of decreases for the remainder of the year. However, this year, as you can see right here, new supply in the market has now increased for the past 2 consecutive weeks. Not a long-term trend, obviously, but we'll have to keep an eye on this to see if this continues in the coming months. In regards to pending home sales, that is at least a 3-year low right now, and also down by nearly 7% year over year. In contrast, let's look at active listings or housing inventory. That has been decreasing ever since really July this year. Here's also something I found to be interesting as well. The gain of 16.15% is actually the smallest gain going all the way back until the 4 weeks ended April 7th this year. In other words, if you guys want to see home prices decrease greatly, inventory is basically moving in the opposite direction. It is actually normal though for inventory levels to kind of peak around the summer months and then decrease for the remainder of the year. So this would be a normal seasonal downturn that we're seeing right now. Going back to Redfin's article, looking at the month supply at 3.9 months, this is easily at least a 3-year high right now. 1 year ago and also back in 2022, the month supply was at 3 months. Now we're at 3.9 months. Also, in contrast, looking at a much more competitive market like we saw in 2021, when back then, average rates for a 30-year fix was around 2.8%. Pretty crazy. Back then, the month supply was only around 2.2 months. Now it has increased to 3.9 months right now. In regards to how fast or how slow houses are selling right now, in fact, it's taking about 37 days to sell a house right now. This is much higher compared to 1 year ago and 2 years ago, when it took back then around 30 days to sell a house. So it's taking approximately 1 week longer to sell a home on average right now. And that, of course, is all helping contribute to the increase of housing supply right now, as houses are taking longer to sell. One thing I want to mention, I just kind of spent about 5 minutes kind of looking at this, is that normally Redfin, right around here, shares the share of price reductions nationwide. But for whatever reason, that chart is gone. I believe it's after they talk about the percent of houses selling over the list price. But in this article, it's gone. So maybe they'll include it in Thursday. If you guys know, please leave a comment below. So here's what I did. I looked at the report from 1 week ago, and you see here's the share of houses that sold over asking. Then you have the share of price reductions. Last week or the previous week, we're at 6.6%, and that was at least a 3-year high during the same time frame. Then you have the percent of sale price to final list price ratio. This week, though, you have these percent selling over asking and no share of price reductions. So I don't know what's going on. Hopefully they'll include that in Thursday's report, but no mention in this report why they're not sharing the share of price drops just like they do every single week for years now since I've been making this video. Anyways, moving on here. One more chart I want to share with you guys is a percent of sale price or a percent of sale price to final list price ratio. So that ratio is at 99%, which is a kind of fancy way to say here that out of all the houses that did sell, the sale was finalized, they sold for 1 percentage point less than the seller's final list price. So if your asking price was $100,000, on average, home sellers sold their house for $99,000, or a 1% decrease of your asking price. That, my friends, though, was at least a 3-year low right now. Lastly, looking at Redfin's Home Buyer Demand Index, that's also at least a 3-year low right now and down 7% year over year. With that said, if you guys got any value out of today's video, then please hit the like button. I greatly appreciate that. Also, check out my website if you guys want to apply for a loan or if you want to get connected with a great real estate agent in your neck of the woods. That's realestateteamfinder.com. Hope you guys have an awesome day and look forward to seeing you on the next video.